Stripe buying PayPal? Show me the term sheet or it didn't happen. That is purely banker fantasy football.
The market disagrees. PayPal's stock is surging. I actually buy the rumor.
You are falling for a deliberate leak. Meanwhile, Abbott just dropped $23 billion actual dollars on Exact Sciences.
Massive scale play. But wait, did you read UWMC throwing a public tantrum after losing their bid?
Total bitter X energy. Walk me through the Abbott numbers first. The rundown. $11 billion for Confluent. IBM is writing massive checks again.
They have to. You can only milk legacy cash flows for so long before you need an actual growth story.
Sure, but $11 billion? I read the filing. They're paying a huge premium for a data streaming platform just to buy their way into the AI infrastructure conversation.
It's an expensive ticket to the dance, Maya, but if you want to play an enterprise AI in 2026, you pay the cover charge.
Speaking of paying the cover charge, Thermo Fisher just closed Clario, $8.875 billion.
The life sciences roll-up machine keeps churning.
Exactly. They're basically just buying outsourced clinical research revenue. It's safe, it's boring, and it works.
You want something not boring? Mastercard is buying BVNK, a stablecoin startup, $1.8 billion.
Up to $1.8 billion. I hate when they obscure that in the press release. The upfront cash is way lower. It's heavily tied to performance targets.
Oh, come on, that's just smart risk management. You're buying a crypto asset in a choppy regulatory environment. Of course, you structure it with earnouts.
No, you're buying a narrative. They want the headline that they're diving into digital assets without actually taking the full balance sheet risk on day one. It's corporate theater.
Which is exactly what a good ex-banker like me loves to see. Limit the downside, capture the PR upside. Just look at the Intercontinental Exchange deal. They took a minority stake in OKX, valuing the crypto exchange at $25 billion.
$25 billion. The gap between public and private market valuations is just completely imaginary at this point.
Completely, but my absolute favorite headline today is the pure corporate pettiness over in the mortgage sector.
Oh, the UWMC meltdown.
Yes, they lost their bid for Two Harbors to Cross Country. Cross Country paid $10.80 a share, and UWMC immediately released a statement publicly trashing the Two Harbors management team.
Just absolutely dragging them.
It's the M&A equivalent of a guy getting rejected at a bar and yelling that she was ugly anyway.
Very professional.
But look, the broader theme is clear right now. Buyers are moving fast to secure assets. The mega deals are officially back.
They are, which means we need to talk about the $23 billion gorilla in the room.
Abbott taking out Exact Sciences, the big one. $23 billion for Exact Sciences. I don't care what the macro environment looks like right now. That is a massive check for Abbott to write.
Massive is one word for it. Honestly, my first thought when the filing dropped was that they dramatically overpaid.
Oh, come on. Exact Sciences is a crown jewel.
A crown jewel that Abbott just paid an aggressive premium for in a terrible interest rate environment. I read the financing footnotes this morning. They're taking on a serious debt load to make this happen, and the synergies they're projecting look incredibly optimistic.
You have to look at the 2026 playbook, Maya. The market has shifted. We're seeing fewer deals overall, but the ones that happen are absolutely enormous. Buyers are finally realizing that if they want high quality scale, they have to bridge the gap between public and private valuations. You just have to hold your nose and pay the seller's price.
Speaking of holding your nose, let's look at what they're actually buying. Exact Sciences is basically the Cologuard company. They mail you a box, you do your business in it, you mail it back.
Spoken like a true healthcare visionary.
Hey, I respect the logistics. It's a great product. But $23 billion for colon cancer screening and some early-stage pipeline diagnostics. Abbott is betting their entire diagnostics growth narrative on this single asset. If the integration gets messy, or if next-gen liquid biopsies eat their market share, this looks like a historic mistake.
See, my old banker brain sees this completely differently. Abbott is buying a dominant position in the most effective non-invasive screening tool in the market, and they're plugging it into a global distribution network that Exact Sciences could never build on its own. 1 + 1 = 5 here equals
1 plus 1 equals 5 is the exact math that gets CEOs fired 3 years post-merger.
Fair, but look at the wider landscape right now. Thermo Fisher just dropped $8.8 billion for Clario. IBM just paid $11 billion for Confluent. The strategic buyers are tired of waiting for rates to drop. They're just pulling the trigger.
Which is great for the advisory fees. You guys must be thrilled.
We prefer the term cautiously ecstatic. But you have to admit, it's genuinely impressive that Abbott pushed this through despite all the regulatory headwinds everyone was crying about last quarter.
I will give them credit for execution. The deal structure is actually pretty clean once you get past the sticker shock. No weird earnouts hidden in the back half of the deck. Just a straight cash and stock mix. They wanted it, they bought it.
Exactly. Sometimes you just have to back up the truck.
I just hope they sterilize the truck first, considering their new flagship product.
Wow. Okay, moving on from mail order stool samples.
Yes, please.
Because if you think 23 billion is a wild number, wait until we talk about the rumor that blew up my phone right before we hit record.
You mean the Stripe and PayPal chatter?
Oh yeah, if Abbott was the appetizer, Stripe exploring a takeover of PayPal is the craziest main course I've seen in years. Voices. I was reading the analyst notes this morning and everyone is using the exact same phrase for 2026. They keep saying buyers are, quote, successfully navigating regulatory headwinds to bridge the public-private gap.
Successfully navigating. That's a beautiful banker euphemism. It just means they're crossing their fingers and hoping the antitrust lawyers are too busy to notice.
Give them some credit. The mega deal is actually back. The analysts are spot on about the shift to fewer, larger deals. Just look at the board right now. Abbott dropping $23 billion on Exact Sciences. IBM paying $11 billion for Confluent. They're buying massive scale because they finally accepted the new normal for interest rates.
I completely disagree on the why. It's not about accepting interest rates. It's about buying growth because organic innovation has stalled out. Look at Thermo Fisher spending $8.875 billion on Clario. That's a targeted clinical research play, not some grand macroeconomic victory lap.
$8.8 billion is a pretty massive targeted play, Maya.
Sure, but compare it to the actual scale plays hitting the rumor mill. The whispers right now say Stripe is exploring an acquisition of all or parts of PayPal.
Wait, really? Stripe taking out PayPal?
PayPal stock is already surging on the leak.
That is genuinely wild. The disruptor eating the legacy giant, it completely flips the script on who the consolidator is.
Exactly, which is why I hate that neat little analyst narrative. The market is completely weird right now. You have Mastercard dropping $1.8 billion on BVNK for stablecoins, and at the exact same time, UWMC is throwing a public temper tantrum over losing a mortgage bid to CrossCountry.
CrossCountry paid $10.80 a share. UWMC just got outbid, and now they're trashing Two Harbors management. It's classic sour grapes.
Corporate theater at its finest. But speaking of drama, we need to check the liquor cabinet.
Yes, we do. Pernod Ricard and Brown-Forman are talking merger of equals. Grab a drink because we are unpacking those SEC filings next. Spill the tea. I refuse to believe the Stripe and PayPal rumor is just noise. The market is taking it seriously.
Oh, come on. Stripe buying PayPal? Do you know how massive of a swallow that would be? I read that report and checked my calendar to see if it was April 1st.
The stock surged for a reason, Maya. Look at the macro trend right now. Buyers are moving aggressively to bridge the gap between private and public markets. Stripe wants that massive legacy user base.
Stripe is the anti-legacy infrastructure. Why would they buy a dinosaur just to inherit a mountain of regulatory headaches? Show me the actual term sheet, and then I will believe it.
Fine, be a skeptic. But you have to admit the mortgage sector drama is giving us pure entertainment right now.
Oh, the UWMC tantrum, I do love a petty press release.
It is incredible. They lose the Two Harbors bid to CrossCountry, who threw down $10.80 per share. And instead of just walking away gracefully, UWMC publicly slams Two Harbors management.
CrossCountry simply had the superior offer. UWMC is acting like the guy who gets rejected at a bar and immediately yells that the girl was ugly anyway. Look at the math. You got outbid.
Classic wounded corporate ego. Speaking of bars, keep an eye on the top shelf. Pernod Ricard and Brown-Forman just confirmed they are discussing a merger of equals.
You know my rule, Nate. There is no such thing as a merger of equals. Someone always takes the CEO's seat, and someone always gets acquired.
Jack Daniels meets Jameson. I am just saying we should probably expense some liquid due diligence tonight.
Nice try. We will see if those filings actually materialize tomorrow morning. Which reminds me, that is not the only paperwork I am waiting on. We need to see how Washington reacts to Mastercard dropping $1.8 billion on a stablecoin startup. Tomorrow's radar.
I'm refreshing the SEC database every 10 minutes waiting for the Pernod Ricard and Brown-Forman disclosures. A transatlantic liquor merger of equals is exactly the corporate theater I live for.
Merger of equals, right? Because those always work out flawlessly and never end in a board-level civil war.
Oh, come on, the synergies are beautiful. Jack Daniels meets Jameson.
I'll believe the synergies when I see the actual math tomorrow. What you really need to watch is the regulatory filing on Mastercard buying BVNK for $1.8 billion.
You think regulators care about a stablecoin startup? It's a rounding error for Mastercard.
It's a massive test case for digital asset antitrust. Read the footnotes, Nate. They're buying global payment infrastructure, not a crypto novelty.
Okay, fair point, but if you want real infrastructure drama, we need to talk about the Stripe and PayPal rumors.
The market is completely unhinged on that one.
Unhinged, sure, but PayPal stock is surging. Let's break down exactly how Stripe could finance a takeover of that size.